Now, for a check of investor mood in the venture capital world, just as we thought investors might be pulling back, WeWork, the biggest player in shared office space, is undertaking a mega funding round, aiming to raise $780 million at a $17 billion valuation. To help us digest these apparently diverging trends, I want to bring in BlueRun Ventures general partner Jonathan Ebinger and our own Bloomberg News venture capital reporter Lizette Chapman. Jonathan, at the moment it seems like, so first of all, these have raised huge amounts of money, and yet they seem to be having trouble spending it. On the other hand, you have a select group of companies, Uber, WeWork, Airbnb, that have no problem, but there are a lot of companies out there suffering. What do you see?
You're exactly right, Emily. What you're really seeing is a divergence in the value that's being created by these companies. When companies are creating value, companies like a WeWork and Uber, they're having a much easier time continuing to raise money. Companies that maybe are looking at more nuanced businesses, some things in the service economy which are nice to haves, those are coming under a little bit more pressure right now.
Are you more cautious?
The early stage market is really different than what you're seeing as a general pullback that catches the headlines. Innovation at the early stage level is really pretty much of a steady heartbeat up and down throughout the economy.
That's interesting because I've actually talked to other VCs who've looked at hundreds of companies and haven't been able to make an investment in 6 months, haven't seen a single thing, Lizette, that they want to back. Have you, what are you hearing more or less of?
I think that you can talk to 10 different investors and you hear 10 different answers depending on who you're talking to, both stage-wise, like Jonathan points out, very early stage, versus these mega hulking rounds, these Ubers, these WeWorks, these other companies that are growing quickly and fast, that are putting up some big numbers.
Jonathan, are you seeing things that excite you still?
Oh, absolutely, absolutely. Now, remember, we're looking at value creation versus stock price appreciation, which may be more of a play at the later stage rounds, but there's still a lot of innovation in areas that haven't really gotten technologically enabled. Things like healthcare, there's agriculture, there's always, while it's a lot of funding, there's even more innovation coming in security on the government side. So there's plenty of innovation coming, and we're absolutely excited about it.
Now, I want to take a look on the other side of the world. UK startups are also worried that they could see access to funding, especially with an upcoming vote on Britain's potential exit from the European Union. Our Bloomberg News reporter Jeremy Kahn has been following that story.
Here in London, the Brexit debate is contributing to anxieties that tech companies are already feeling about the headwinds that are coming from the U.S. We talked to one startup, SUP. They're a friend finder app, and they were in the middle of trying to raise a round of funding, and they had a German investor who they thought was going to commit about $140,000. But as soon as British Prime Minister David Cameron announced the referendum for June, this German investor pulled out, saying they didn't want to make any more commitments to the U.K. until they knew which way the vote was going to go. And that's something that's happening just because the vote's taking place. I think if the UK actually does vote to leave the EU, then all bets are really going to be off. The startups here are very dependent on the EU for hiring, and their business models are also extremely dependent on easy access to the European common market. If that goes away, they're going to be at a real disadvantage. We talked to TransferWise, which is one of sort of the darling fintech companies of the London tech scene, and they told us that if the UK does vote to leave the EU, they're going to consider moving their headquarters outside of London. Back to you, Emily.
Jonathan, you guys invest in Europe. If the UK leaves the European Union, what impact would that have on the tech scene?
Well, I think you have to look at what is going to be the upshot of them departing. There's a lot of talk about the regulatory regime changing. I can't imagine it's going to be more simple with a series of bilateral agreements that would result. But at the same time, there'd be more sovereignty in the UK, at least in theory. That's all at the 30,000-foot level. Down at the grassroots where early stage investing is, innovation continues. So we're not paying that much attention to it other than really just as an interested bystander.
Lizette, what sort of trends are you seeing in the European tech market that are different than what we're seeing here in the United States?
Right. Well, last year, I'd like to point to something last year in the most development. Last year, there was a huge spike in European seed funding for all these different startups. It was one of the highest years on record, which was a big boon to the ecosystem, which traditionally has struggled to get these very, very early stage rounds done. With the news today that that there is this pullback and there are some concerns, there are some questions about whether that very early stage funding will continue.
All right.
That's what we're seeing.
Okay, Lizette Chapman, our venture capital reporter, thanks so much. Jonathan Ebinger, you're sticking with me. We're going to go to another side of the world and talk about China after the break. China is getting into the venture capital business in a big way, raising $231 billion in 2015, effectively tripling assets under management in just 1 year. What's the plan for this money? Who's managing it? How will it be spent? I want to bring in our Asia Tech Companies editor, Peter Elstrom in Tokyo, and BlueRun Ventures general partner, Jonathan Ebinger, still with us. BlueRun invests a lot of money in China. But Peter, first of all, lay out, we were just talking about the U.S. versus Europe when it comes to venture capital. What are the trends in China?
Well, China has been seeing a big rise in venture capital investments from the private sector. Last year, the amount of money going into startups more than doubled to about $37 billion. So it's certainly been investing a lot of money in startups. A lot of this is follow-on from the Alibaba IPO, of course, the biggest IPO on record so far. A lot of the VCs saw the opportunity to invest in China and come up with some kind of hits in the future. Now, this is very different. This is money that's coming from local and central government agencies, and they're looking to put even more money into venture capital. The numbers are kind of staggering here, so there are certainly some risks. I think the reaction that we got was that that it looks like this could be a big problem because there's so much money that could flood into the market. I think the big questions are going to be how quickly this money is invested and then exactly how they invest the money in the market.
Jonathan, have you felt more competition for deals in China?
We have, and that was really even before this new onslaught of capital came into the market as being discussed here. This is a real game changer. I mean, to put it in perspective, the amount that they brought in last year equals the total amount of money managed in the U.S. in total. They did it in 1 year.
And what trends are you seeing in the startup scene there? I mean, we're dealing with a broader question about slowing economic growth in China. Is it having an impact on startups and optimism around startups? Well,
the optimism is definitely on the rise. Whether that's backed up with increased innovation, it's hard to say. Innovation and dollars deployed don't always go hand in hand. Innovation, as I said earlier in the segment, is a relatively steady pace of innovation. Adding a lot of dollars doesn't necessarily create innovation just on the face of it.
Peter, what are the big risks investors are concerned about when it comes to Chinese startups specifically?
I think the big risks are that they would be worried if this money got deployed very, very quickly. I mean, it's a staggering amount of money, right? More than $300 billion. So if the government agencies try to push this out very fast, you could see the money going into some pretty terrible investments. And China has tried to do this before, making heavy investments in solar, for example, and steel and other industries like that. And sometimes it hasn't turned out well when too much money is going into particular sectors. The other key question is whether they're going to partner up with experienced venture capitalists, because you don't want government officials with very little experience in startups or the technology community trying to pick out investments. That's probably going to end fairly terribly too. On the other hand, they could partner up. I mean, obviously we've seen in the U.S. there are a lot of government agencies. CalPERS puts money into venture capital funds. If you see this money going in with experienced venture capitalists, then there's a better opportunity, I would say, for some positive returns.
So, Jonathan, what are you bullish on and what are you staying awake from when it comes to the kinds of companies you're investing in China?
Well, we're staying away from traditional industries. That category seems very well funded. And
like what?
Well, heavy machinery, even communications, optical networking, businesses like that.
So no social networking in China.
Well, that as well. That's right. The areas that are interesting really are more things around healthcare, things that play into the demographic of that country, the rising middle class, social media. As you know, we were investors in Ganji, the biggest exit of the year last year, worldwide in venture. Social media has yet to really monetize very well beyond China-specific companies due to regulatory regimes that are there. You know,
I was recently speaking with Jeff Weiner, and LinkedIn has found a way into China. Still small business there, but growing. Do you think that other American social networks like Facebook and Twitter have any chance?
Well, I don't think they do at this point, but not because of the regulatory regime. I think because there already are strong players in place. Sina Weibo is doing a nice job already. That market is pretty well saturated. You have near 100% smartphone to social network compliance already, so there's not a lot of room for a new player that I see right now.
All right, Jonathan Ebinger of BlueRun Ventures, Peter Elstrom for Bloomberg News in Tokyo. Thank you both.